So, Nick, welcome to the FintechOS podcast. We're here to deep dive into the challenges and the opportunities shaping the financial industry. Today, we're going to be tackling a very topical subject, which is DORA, or the Digital Operational Resilience Act. Nailed it.
Good work.
And the heavy burden it places on banks as they kind of overhaul their legacy technology to meet DORA requirements. And, of course, the opportunities that arise from it. You're here to help me unpack that, Nick. You've spent several years consulting with UK banks, building technology to increase digital engagement, and we are very delighted to have you here today.
Pleasure. Thanks for the invite, and I'm looking forward to getting stuck into the topic.
So let's deep dive into the hot topic, which is DORA. It came into effect on the 17th of January.
That's right.
Financial institutions had a couple of years to now get this right to start with. It's bringing some significant challenges. So what do you see as the most significant challenges the banks now face meeting these DORA requirements?
I think the largest challenge has been just the sheer breadth of the regulation, the complexity of the requirement. So DORA doesn't just mandate compliance, it demands a cultural shift towards resilience and thinking about resilience in a more of a business sense than a technology sense. And that for DORA also includes the supplier landscape as well as the financial institution landscape. So the breadth of it is pretty challenging and pretty hard to get your head around. And banks need to think pretty much all of their operational frameworks, the way they manage vendor relationships, and there's a large implication for technology.
You talked about other frameworks there. So how does it compare to the FCA's operational resilience regulations?
So we have obviously the FCA regulation, which hits us in compliance is due for March. They're quite different because the FCA's approach and the UK approach has been more around thinking about the business risk, whereas DORA is more specific in terms of the outcome of how to address that risk. So they're quite different frameworks. And DORA is much broader in scope than operational resilience is. So, for example, DORA covers third parties, as I mentioned, whereas FCA's operational resilience doesn't. And is very prescriptive. So, for example, incident response within DORA is mandated to be 2 to 4 hours, whereas in the UK here we're 24, 72 hours. So
that's a big difference.
There's a very big difference in how proactive DORA requires you to be around these topics.
And how are banks operating in that way? In the last couple of years, I've had a runway to get used to that. But is there a bit of business as usual?
It's an element of business as usual, but I think most of the banks will already be working on these topics. But what DORA has done is mandated professionalism and mandated prescribed measuring approaches for how these are carried out inside institutions across the entire European marketplace. So not just the hotspots of the classic markets, but the whole of the EU. So it has quite far-reaching implications. That's
a great point, because we talked about the UK and say it reaches out into the EU. So in your opinion, is there a difference there in terms of, I guess, people's maturity or their ability to get on top of DORA in this time set?
I think there'll be a difference in maturity when you look across all of the member countries within the EU. There will be a difference in maturity, certainly, because the markets are different scales. For sure. And for companies in the UK that want to work in EU, which of course many financial services organisations do, the approach will have to be to maintain dual compliance, both with the UK regulations and the European regulations, which is going to be quite a big task.
Wow, I mean, it's pretty clear that DORA is going to have quite an impact on the industry. So what do you think? We've talked about some of the issues of DORA, but it's going to bring some opportunities as well, right?
I think the opportunity is, the focus on resilience ultimately means having banking and financial services available and that means not as susceptible to cyber fraud, cyber attack or fraud attack, or just plain old availability of services. Improving those things, without doubt, increases customer confidence in the sector. So overall, the opportunity for banks is to be on the front foot in terms of best-in-class operational availability. It's synonymous with being the most trusted name, the most trusted brand. So that's the opportunity.
I mean, it sounds it could be quite expensive for banks.
Expensive, I guess. I mean, if you look at the fine structure from DORA, it is quite punitive. So if everybody remembers when GDPR came out, everybody sort of took a sharp intake of breath, but DORA goes much further. It's 2% of global turnover with no cap. Yeah. So if you do a quick sum on some of the largest banks out there, that could be £1 billion fine, which is a big number to. So even it's a measure of how seriously the EU is taking this topic of operational resilience.
So actually, the expense compared to the potential fine and the reputational damage that it could cause by not doing this right is small potatoes. Isn't it?
It's a must-have. It's an absolutely vital investment. Yeah. But I think generally operational resilience is something that ultimately banks have always been interested in. It's just now that it's become less of a dusty corner of technology, and now it's become pushed to the fore.
You talk about dusty corners of technology, which kind of leads me on to the next question, which is around legacy technology and infrastructure. A lot of executives in financial institutions would list this as one of the number one reasons why they struggle to innovate. Legacy
technology is not built to be fault tolerant. That's the reality. Graceful failover is not really a thing for old-style core banking platforms, for example. They just stop working, and everybody knows about it.
Yeah.
So taking direction from what happens in social media and these big global technology platforms, which is thinking more about graceful failover and compartmentalizing systems into smaller services, so you can turn one off and it doesn't break the other. Is the challenge. That's just not how legacy technology is built.
Is that why it's so difficult to effectively change legacy technology?
Yeah, because it's hard to just knock a corner off at a time. Because the legacy technology tends to be a monolithic style of thinking. But there are approaches you can use. So the fintech market has really helped because of the ability to now go to best practice for certain aspects of the banking market, the banking ecosystem. That's right. So that helps.
Yeah, I mean, unpacking those legacy platforms, it just reminds me of like a spaghetti junction of wires and APIs and pipeline and all those kind of things. It kind of thing, when you start unplugging one, the lights go off, or you unplug another one, the cash machines go down, or whatever it might be. Are there any specific examples of legacy technology posing risk to kind of operational resilience you can think of?
I mean, I think every bank you speak to has got a story about a system going off overnight and everybody scrambling to prevent a customer-facing outage. Yeah. So it's a common problem.
Yeah, it's interesting because obviously I've worked in the front line for many years in banks, and I transitioned over into technology in the latter part of my career working for some banks, and it never dawned on me the amount of energy and effort it takes to maintain some of these systems. And we talked earlier around people getting phone calls at 4 a.m. in the morning because things have gone down. And I guess as a frontline user or as a customer, you just automatically assume that these things work, right? You take it for granted. So when it goes pop, then all hell breaks loose. You have no comprehension of why that's happened.
I think that's the complexity of the financial services market and the institutions is they are extremely and inherently complex. Which is why making small changes and trying to influence an overall system is difficult. Yeah. One thing that the UK regulation does is pushes banks to think about the overall service and the overall risk of an overall service, rather than has my core bank got a certain level of availability, or has my front office system got a certain level of availability. Yeah. You're encouraged to look across the whole system. Yeah. And actually that is in itself an innovation which will force engineers to start thinking about how they build system availability as opposed to individual application availability. So that just shifting the dial to that direction will have a big implication and a big impact on operational resilience of systems in legacy systems.
We're starting to kind of talk about banks starting to modernise the ways in which they work and the systems they operate, whether it's upgrading or building new or replacing sometimes. Look, they all come with their own positive and negatives, and look, we've seen a few of those go right and a few more that's gone wrong in our time. So I guess what approaches do you recommend for banks looking to kind of modernise? Is it incremental, or is it big bang? We've seen them both. We've got a few scars. Which ones do you recommend?
I mean, it depends slightly on the size and scale of the bank, but for most of the mid-tier plus banks here in the UK, in the European market, whole-scale change and big bang all in one go is really, really hard to orchestrate.
Yeah.
And
it takes a lot of time, right?
Comes with a massive amount of risk, and it's a moving feast because you'll switch over on before Christmas. Yeah. Let's be in by Christmas or whatever that is. By the time you get there, the systems have changed because other regulations have moved.
Yeah.
So I think one of incremental change is now where everybody's moved to.
Yeah.
And I think layering certain services. So, for example, the ability to observe how systems are behaving is really important. So I know one bank here in the UK now have an observability platform over their mainframe, which means they know more about what the mainframe is doing than the mainframe itself knows about what it's doing. So it gives you a whole rich amount of information to act on, and actually you can get ahead of the potential problems before the core bank realizes that it's in trouble. So that's an example of using the modern technology alongside the legacy to really help improve the operational efficiency.
Is there an element of dual running? Because stakeholders will be very, very quick to want to turn off certain platforms to reduce costs. Is there an element of dual running platforms just to give you that resilience, right? So if one does go wrong or the other one isn't quite performing the way it should be, at least you can always fall back on your existing.
I think resilience is the word to answer that. So whether that is two systems or a system that is fault tolerant, so you can turn off some of it and the other bit carries on.
Yeah.
So one of the interesting approaches that Netflix used in 2010 is they invented a thing called the Chaos Gorilla, which was designed to randomly turn off stuff.
That's a hell of a name.
The engineers didn't know what was going to, and actually that idea has now become more prevalent. Sort of 10 years later, I think Amazon now have a fault injection service.
Yeah.
And actually you want to introduce unpredictability into your system to observe how it behaves, and so that you can react to it in the right way, rather than waiting for it to happen for real when the customer's on the end of a transaction, or when you're doing your year-end processing or day-end processing.
Do you think we should get Netflix to name all of our regulation from now on?
It'd be way better, wouldn't it?
Jesus, wouldn't it? So look, we've both been in this market for a long time, and you've been hugely successful, with a number of banks. So are there any kind of success stories where you can talk about where a bank has truly effectively kind of integrated modern solutions and legacy infrastructure together without naming names?
I think the aforementioned bank I previously worked with, they've done a really great job of building technology around the core that makes the old core pretty invisible to the new digital services and makes it very fault tolerant. Yeah. So you could even operate without the core at all for periods of time during the business day, and nobody would know there'd be no customer facing service outage. So that's really, really impressive, and it's the way to go, I think, over time. Yeah. I can think of a converse story though, because with great power comes great responsibility. So I'm aware of a bank that an engineer typed a few lines of code and pressed go, and all of the payment flow went around AML monitoring. Wow! So suddenly none of the payments were being checked for fraud, and it literally was a case of type code, press a button, it's in production. So the
kind of skip the testing cycle.
Skip the testing. It will go. So the I think that's a reaction to the other end of the market where banks that are completely digitally native and tech savvy. Yeah. The regulation is aimed at those guys as well, because bringing a bit more testing and what might be seen as possibly needless slow stuff, which I get why you might think that, but actually in terms of making your service available, it's also important to have a bit of control. One
of the key parts of DORA is kind of managing those third-party suppliers, vendors, and people within the ecosystem. And we've talked a lot about the bank's burden of DORA, but ultimately the responsibility sits with the bank. But banks operate, as we've talked about already, with numerous fintechs and providers within that ecosystem. So that has to be shared across that partnership. So how do banks better monitor, I guess, their third-party relationships in that regard?
I think one of the things that DORA has done, which is different to the approach in the UK, is place some of the responsibility for that onto the third parties, and the third parties will also be monitored by the regulator, which is different to the situation we have here in the UK. But you're right that whoever you use to help you do stuff, the responsibility is yours and remains yours. And I think actually there's a knock-on implication for the way you do contracting with suppliers, which is a non-technology implication. So having clear exit plans, for example, that are believable and tested is quite a big responsibility that is moved from, yes, we should have an exit plan, and into what is the exit plan? Is it believable? Can it be executed? And that means vendors have to be really on board with thinking about the exit. If it, which is not something a vendor wants to talk about normally, because they want to think, it's a relationship forever.
Absolutely.
But that might not be the case. And so
isn't it the case that some of these vendors almost on purpose make it incredibly difficult to move away from, right? So they're hard-coded in, they're fully integrated in, actually to move from one provider to whoever the next best-in-class provider is, takes time, energy and effort, and sometimes can be almost impossible. How do we counter that?
That's a hard question, right? Thanks for that one.
That's all right.
I mean, there's a technology answer, which is to build portable services and to build resilient services that can talk in an API native way to whomever comes along, which is a technology answer, which makes portability easier. But there's also the commercial aspect. So signing a 7-year deal sets a signal that you're not going anywhere for 7 years,
of course,
apart from in an exit scenario. Whereas actually within 7 years, the type of innovation that's going to come into the marketplace is going to be impossible to predict even 3 years out, never mind 7 years out. So vendors need to be open to taking more risk from that aspect. Otherwise, exactly what happens is you're locked in.
I mean, I threw that bomb at you. You took it, and you did well with that.
Thanks, mate.
That's all right, good. I mean, a lot of that sounds super expensive. It sounds like that's going to be a pull on a significant part of resources within the bank. So you've got top tier banks that have divisions of thousands who can look after this. But as you move down those tiers into some of the smaller banks who have people you can count on one hand, that's going to be a hell of a burden on resources and internal people to address all these risks.
And I think that's where the partnership with the technology community, the fintech community, and the established vendors is so important, because they will need to engage with the small bank in the same way that they engage with the larger bank, because that's what
from
the
a regulation point
saying.
of view. Yeah.
So where the smaller bank may not have the resources to manage that in the same way as the larger bank, and some of that effort must shift to the vendors. So providing a technology service is one thing, but providing support in terms of how to manage these regulatory requirements is also going to be necessary. Yeah,
absolutely. I want to kind of change gear to cybersecurity, because look, it's a 24/7, 365 day risk. And I was talking to you earlier on about, I was chatting with a executive for a bank just before Christmas around what keeps him up at night. And he could have said a whole bunch of things like growing his market share, or keeping costs down, or keeping his shareholders happy, keeping his customers happy, staff, whatever it might be. But without skipping a beat, one word answer: cybersecurity. He just said it scares him half to death. And he's right. We talked earlier on about somebody taking a phone call at 4 a.m. in the morning. It is 24/7. So how do banks strengthen their cybersecurity to align with DORA's requirements? I mean, sure, this is an opportunity.
I talked about operational resilience being more about making individual systems more fault tolerant and more graceful in terms of their failure, but that's also a necessary strength for resisting a cyber attack. Because in an ideal world, taking out a portion of the bank wouldn't matter. You could isolate it and deal with that problem whilst the services continued in the other portion of this bank, right? So this whole topic of operational resilience strengthens the resilience from a cyber perspective as well. And it is a wild west at the moment. Everybody is getting absolutely
pelted
daily. There's thousands of attacks daily.
I have a stat for you.
Do you?
I do. So in Q3 of 2024, the finance banking industry experienced an average of 1,696 attacks per week, which was a 40% increase on the same period in 2023. It just goes to show.
And it's not going away, as a 40% increase in the last year. The threat actors have access to the same automation and AI and technology that we do.
Yeah.
So that's a race where staying ahead of that is why opportunities it's why DORA is so important. Yeah. I mean, the UK has a Cyber Resilience Act coming, which is going to be broader than just financial services. So it will cover water and electricity and a broader range of the economy. But the intention is the same. Yeah. It is to try to really push forward the strength of resilience for ransomware or whatever the attacks of the day might be.
Yeah. Of course, I think any time a bank launches a new product or has gone out and they're starting to launch a new platform, whatever it might be, I mean, that's high time for a cyber attack. And I can recall a time where I was working for a bank and we'd put out to market a product around CBILS, which is the government-backed guarantee scheme around COVID.
Yep.
And within the first couple of days, we had an attack which was actually on one of our vendors, which was a EID&V provider, where a guy had gone down the high street and purchased what I can only tell you was the worst possible rubber mask I'd ever seen, and doctored his passport to look like it and run through a loan application on the back of obviously a fraudulent appearance and a document. Used the mobile phone for the likeness check. Now, thankfully, the vendor picked it up almost immediately and flagged it as fraudulent. So it's going to show you banks are trying to innovate, but at the same time, the moment they try to innovate, it's open cinema and it's a go for them. This is the time we're really going to test them. And on this particular occasion, we passed the test, but it's, as you say, it's Wild West.
It's it's highly innovative. The whole marketplace, you have to hand it to the innovative idea of. Well, maybe I can fail the automated check for facial recognition based on buying a dodgy.
Maybe I've done a disservice. Maybe he's a genuine person, but he's the most ugliest person I've ever seen in my life, or it's a rubber mask. One of the two. So I mean, it's a great pivot actually, because I'm talking about banks working with fintechs, and I think banks and fintechs are in the same game together. So this is an opportunity to help each other, right?
Absolutely, absolutely. I mean, obviously there are fintechs who specialise in cybersecurity or identification. One topic of absolute importance for banks is the understanding who you are dealing with. So in that example of who is the person, is it a real person? Have you seen them before? Yeah. And one of the things that DORA is doing actually is encouraging banks to share that type of information as well. Yeah. So at the moment, banks are quite insular in terms of sharing. I have this threat, or I have seen that threat. But I think the landscape will change, and there'll be more interactivity between banks when certain threats are noticed. Yeah. Because the sector has to become,
of course,
more organised and stronger.
It makes sense, right, to share that intelligence, because if you're experiencing that kind of attack or these issues, of course, other people.
It means everybody else is.
Yeah. So the quicker you guys come together and figure that out, it'd be far better for the industry. I mean, we started to touch on some of the technologies involved, and there's some emerging technologies coming out. I know exactly what you're going to say before you're going to say it, but so what are some of the game changers that we're going to see in cybersecurity?
Well, one of the game changers, I'm going to say it, it's going to be AI.
Yeah,
fine. And for two reasons. One, the ability to monitor and understand the volume of attacks. It requires a machine. You just cannot do it without a machine.
Yeah.
And so intelligently understanding and identifying the attacks is super important, and that kind of AI-powered security operations center will become a big game changer over the next couple of years. It's already starting to happen. Yeah. But the other aspect is AI checking AI. So the results that the security operations center comes up with also could potentially be hundreds of hey, I've got a problem every minute, and you need something to monitor that as well. So AI layered on AI will also become hugely important.
You've just described Skynet.
Maybe.
Yeah, I've got a Terminator music going on in the background.
But the thing about the Terminator is, if we built the Terminator now, you'd need a data center the size of like, a car park for the processing power. So to kill it off, all you need to do is sever its Wi-Fi connection, and it's a dumb thing to get that car park into its little metal skull so it can walk around. That's when we're in trouble.
I'll tell James Cameron that he got the entire plot wrong. Just cut the wire.
Just cut the wire, or just cut
done.
the internet connection, so you can't do anything.
So look, there are a whole raft, a number of fintechs out there where you can choose to partner with, all kinds of best in class, and all provide all various different parts of the solution. And we've kind of talked about it a little bit before, and some of the responsibilities that now need to be passed and shared with some of the fintechs. So, how do you go about choosing the right fintechs and the right partners now?
I mean, that's a tough question, because the market is crowded, and also new entrants come into the market on a continuous basis. And I think the aforementioned strategy of being more flexible, having flexible services, having the ability to test and try different platforms, is what opens you up to starting a relationship with a fintech and maybe trying it out and not having to sign a long deal before you know whether it works or not. So I think from banks, we'll need to have a slightly more innovative outlook in terms of how they select and work with vendors, rather than, okay, I've done my sourcing now, I don't have to think about this for 3 or 5 years.
So I guess the platforms that kind of bring data together would help, the kind of unification piece.
Yeah, centralizing data, understanding where your data is, what it's for, why it's being used in a certain way, is the type of services that you can buy ubiquitous service from some of the big cloud providers, and they're very powerful. But you can also then provide specific services to look at certain aspects within the fintech. So a ubiquitous service allied with some of the best-in-class services is going to make you a very powerful ecosystem for the bank that's prepared to go in that direction.
And I guess the ability to flex and change and scale is going to be a key parameter that banks look for in fintechs.
I think so. Flexibility is key and vital.
Yeah. Okay. So we spoke earlier about how difficult it is with legacy systems. I neatly described it as a spaghetti junction. So can low-code or modular platforms kind of help banks meet DORA requirements, and again provide that opportunity to innovate?
I think absolutely. I mean, I think low-code and even no-code platforms, they just provide you the ability to run faster. So you can spend more time testing and innovating and trying ideas versus building the thing in the first place. And so that has to be a better thing. That has to be a good thing. So any bank that I guess there are no banks that aren't playing with that technology at the moment. I mean, I know of a large tier 1 bank that has over 1,000 ideas they want to try, which is that in itself is a big problem to try and figure out what's the right place to start. But no code and low code gives you the ability to do that quickly. And that speed of innovation is what is vital. Most
banks that we've ever talked to and worked for, that speed to market, whether it be an operation resilience platform or project, or whether it be a customer facing product, or that speed to market is going to be a key differentiator in any marketplace. And that's what everybody's fighting for. How can they reduce their speed of money, time to market? How can they reduce the customer's journey from the moment they inquire to the moment they have their money account or their bank account open? That's the holy grail. And many banks have started that journey, and some of them have coming very close to finish it. But everybody's got a slightly different take on how they do it.
Well, that's a good thing. I mean, that gives us strength in the marketplace. But I think there is speed to market, which is really important, and there's also personalization of services.
Yeah, absolutely.
And actually, the more you drive to, why have one product?
Of course,
you could have 1,000 products personalized at a business level or a customer level. Clearly, the operational management of that scale is a different problem, but that's where you can use AI and automation, and that's where you can innovate. Hyper personalization is definitely where the market will go.
Yeah, absolutely. And we kind of move into the future of financial technology. How do you see the role of fintechs evolving as the regulatory command? They're only going to increase the demand. So how do you see that evolving?
Well, I think the fintech marketplace has been incredibly good at driving innovation and disrupting established ways of working. I mean, if we think about some of the idea that now you can have a document summarized for you, you can produce your identity, your agreement in principle, perhaps it'll be 90% ready within your risk appetite potentially. It makes so much difference in terms of the speed you can move at. And that is an innovation which we have probably wanted to do for 20 years, but the technology is now here to do it. So that fintech market and the way the fintech markets operate is laser focused on finding the next crack, if you like, on the next gap, filling it with a service that improves that gap. So we're lucky to operate and live in the London market where we have so much incredible innovation happening all around us.
I agree, and I think the customer expectation has moved on somewhat. I mean, from when I started banking 20 odd years ago and to what it is now, the expectation of digital first, at your fingertips or on a mobile phone, it's an expectation now.
It is,
and so anybody who's still operating that way, you're going to find yourself highly irrelevant really, really quickly.
Oh, that's absolutely right, and I think there's actually it was something I know McKinsey have talked about the kind of divergence between banks that have really invested in technology and those that have not. And you can actually see the valuation by market cap. If you let yourself get too far away from that game, you're going to either be acquired or you're going to go out of business, because the banks that are investing in the technology are the ones that are consistently growing and improving their market position. So it's vital.
Driven by the neobanks coming in many years ago now, they're driving valuation themselves, but they've driven that customer experience, UX experience, and a lot of the traditional banks are kind of playing catch up. And the startups are, always envious because they've got no legacy, they've got no cobwebs behind them. They can kind of start from fresh.
I think there's an there's just a cultural attitude as well. So I remember being global chief architect for a really large bank, and we seriously, and this was maybe 2014, and we were seriously having discussions which I, to be honest, couldn't understand. Should we include the customer
within
the discussion about what the digital services should like? Should we actually get some customers into a room and talk?
Dare they see a customer?
And it was, really, should we, and that clearly seems ridiculous now, 10 years later, but actually, there are still banks out there that aren't doing that, and that is really crazy. I had a similar experience when we designed a broker portal. You think you're designing a platform for a cadre of stakeholders, and you don't involve them. So then you launch this product to a lot of brokers and go, this isn't what I wanted, this isn't what I expected to see, so I'm not going to use it. You spent a shed load of money, time, energy, and effort to design and build a product that isn't going to be used. Of course you bring them in. It's the agile project that worked for a year before delivering anything, and then the customer said they didn't like it.
They did, yeah.
I think we've all seen some of those going on.
I'd say. Look, so I want to kind of move slightly away from DORA and get into some more broader industry trends around digital transformation. So beyond DORA, then, how is digital transformation reshaping customer expectations? We just started to touch on it just then around banking at the fingertips, mobile phones. So are you starting to see that now, that shift?
I think access to financial services in a seamless way at the right time is which is part of the hyper personalization journey, is where the market will how the market will develop over time. So if you think about either be buy now, pay later, or
embedded finance,
thinking about buying a new car and wondering, do I have to take the finance package that BMW offering me, or whoever it might be, Skoda, or have I got options, and what might they look like, and how are they tailored to my situation? So I think that is the way the market will evolve, the hyper personalization and embedded nature of finance, and the non-sexy bit of making sure you've got the right money. Can you afford it? Are you who you say you are?
Yeah, of course. Yeah.
All of those things have to happen seamlessly in the background, and they kind of don't at the moment, and that's the opportunity for the market.
I've used open banking. I'm sure you have used open banking to buying your latest sofa, or your couch, or your car, whatever it might be. And it's a very seamless application process. It's at your fingertips, and you got your decision, and the money's in the account, or the bank account of whoever you purchased it from. Within minutes. But open banking, in terms of business usage, could be sometimes a bit hit and miss in the UK. I don't know if it's a trusting issue where. You've got the whole analogy of taking the umbrella away when it's raining. So businesses have given banks access to their accounting platforms for open accounting. It would make for a fantastic seamless journey, a much quicker journey. Banks can potentially pass on that cost, could reduce cost risk back to the customer in discounts. And yet it seems to be hit and miss in terms of its take up.
I think what open banking did obviously was open the idea of access to that information, but it's still really early days in terms of the way that's been innovated, especially for companies. I mean, if you think about the procure to pay process, understanding what costs are coming in and matching that to a financial product, which you might want to hedge against a currency, for example, that's something that a bank can do and a finance package can do, but we haven't really seen that close connected nature yet, but I think that will happen as some of the new ways that the payment infrastructure is going to grow and change over the next 5 to 10 years. That will also encourage that type of interactivity. So I guess the short answer is we have to go further than we have done at the moment for it to really start take force. Good news for us is we're ahead of the other parts of the market because we're thinking about these problems now.
Do you think there's an over-reliance on technology?
You're going to ask that to a technology guy? Yeah. Absolutely not. The reality is we're past the point where technology is an optional thing. I mean, we are so reliant on technology. Yeah. Back to DORA, that's the reason why the European regulator has acted, because technology is there. You can't. It's not optional anymore.
So Skynet's still coming.
Skynet's still coming.
Let me flip the question then. So, is there an over-reliance on people? So, we've both worked at banks before where there's legacy technology. It's been there for donkey's years, as are the people who've supported and serviced that piece of kit. There's a single person concentration risk, and certainly in the smaller banks. If anything happened, or they move, or they leave, they go to a job, suddenly they've got to run this platform or this piece of kit, and the SMEs just walked out the door. How do you negate that? Except for good documentation.
Look, if you're sitting on a platform that has been in your bank for 20, 30 years, and there's nobody in the bank that understands how it works, or one person, that's an outsourcing risk, an internal outsourcing risk, which operational resilience will force you to look at. You can't be in that situation if you can't afford a bit larger internal team. You need a vendor that can help you with the
back to the ecosystem.
The ecosystem.
Yeah, I understand that.
There are smaller banks that are in that situation, and it's a chessboard of planning your way out of that, introducing resilience at key points, and so it's we talked about big bang versus incremental, but it's really an incremental journey that you have to go on.
If I press the fast forward button on my remote control, maybe up to 2030, the good news is both my kids will be through university, so I'll be a lot richer man. But what do you think?
We can retire.
I'll be close to retirement. What do you think operational resilience would look and feel like then in 5 years, or maybe in 10 years' time?
I guess it feels like a new thing now, but actually it won't be then. It will be. It'll be absolutely seamlessly part of an expected behaviour, and I think that will take some time to get to that point. Again, I'd make the comparison with social media technologies. They work seamlessly wherever you are, and if you lose access to some services, it doesn't matter. Your services keep running. Now it's a bit harder to do in transactional nature of financial services, but not impossible. And once those engineering challenges have been overcome, then that strength of the marketplace will become an incredible asset for nations and also businesses that have invested in those things. That's where it'll come to.
When you look at Google and other well-known names, and in social media companies who they seem to have got it so right in terms of the way they collect data and they commercialize it and what they know about us and the right point to sell to us and the insights that they create. And then I flip that back to financial institutions, and you've got the data which the financial institution will have, whether it be transactional, financial, about us personally, even the fact that when our birthdays are, whatever it might be. And yet, that data orchestration and the ability to flip it into insights, or even consume it and use it at a level, seems to be such a difficult nut to crack.
I think there has a technical dimension to it, clearly, but there's also an ethical dimension, which is something that will develop over time. What if a bank knows that I'm spending twice as much on a service as another similar company, another bank next to me of a similar scale? What should the bank do with that information? Is it ethical for the bank to say, hey, you know that your network services are really expensive compared to, is it ethical? No, probably no, it's not ethical. But what could that information be made available in some way? Maybe and probably. So actually the ethical dimension is probably going to be a bit slower behind the technology dimension. And that is the other really fun and fascinating, interested part of this transformation journey we're on.
You're a technician. There's going to be some technical issues with how banks even present their data. So we've talked about it before, where in one system a piece of data could be called a spade, and another one is a shovel, and the next one it's something you dig holes with. So you get in 3, 4, 5 versions of the truth, which is one single bit of data. And yet, as banks continuously increase technology and bring more and more partners on, they almost make it worse because they're not truly addressing that single source of truth.
Yeah. And I think that's back to AI. That's a huge strength of AI, because the classic show AI a picture, is that a cat or is it a dog?
Yeah.
Actually, the AI being able to correctly classify which of those two things it is, given a whole wide variety of inputs, you're moving the problem away from, I've got to make sure I present a picture of a cat and I'll control the picture to make sure it looks in a certain way so the computer can understand it, and you're shifting the problem so the AI is able to recognize and auto-recognize. So it can notice the themes, and it can notice the adjacent data points in a way that humans can do, but systems haven't been able to do up to this point. So that's a huge game changer.
And I guess that could potentially drive. We hear this buzzword all the time about a 360-degree view of a customer, right? And that's how do you define a customer? But I've been in this game a long time, and it's incredibly difficult to get to that point where how I define it as a user is that on a single pane of glass, or it's your laptop or your screen or your iPad or your phone, you can at a glance be able to have that view of your customer, whether it's the balances, whether it's the products they hold, whether it's how happy they are with the bank, last time they surveyed, last time they was contacted, what they contacted about, everything, a true 360-degree view. Will that help us to finally get there?
I think the barrier is also ethical, because how much do you want one institution to know about you and share with others? And as a customer, I can't really think of a bank at the moment that is that transparent, really, about, okay, this is how we're really going to share what we know about you, and we're going to use it. Okay, it's in the T's and C's and I can read it in the fine print, but building that as a service and something I can really interact with and say, I actually don't mind if you know about my life events and you share it with these types of partners, because that will help me. So I think that ethical piece is going to once the data is available, that's what's going to be catch up. And that's where the innovation will happen.
But we're coming to the end of the podcast, so
already
I just wanted to finish with a couple of maybe quite pointed questions, as you are the expert in the seat. So a couple of questions. So the first one is, what advice would you give to banks who are just starting their journey towards DORA compliance? Not started, but they're on their journey. And the second one is, if you were leading a bank's digital transformation, what would be your top priority?
Testing is the testing regime. Start the testing, improve the way you think about testing. Testing is a tool for innovation, not just something that you have to do at the end. It's a bit annoying. For the general approach, if I'm thinking about looking at a bank, I'm going to want to look at understanding your data and personalization of the data to provide better customer services. And back to the bank that didn't know whether or not to include the customer in the conversation. Include the customer in the conversation.
Yeah, that's great advice, Nick. So thank you for your time today.
You're welcome.
Really appreciate it. And roll on DORA.
Roll on DORA.
Thank you.